Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today, what we're going over, we're going to talk about the stock market hitting all-time highs, some of the challenges that it's facing ahead of that, how a lot of people think that the market is overvalued, including myself. But the thing is, we have a lot of negatives, but also a lot of positives going towards the market. And then after we go over that briefly, I want to talk about a comment that I just got here on my channel. It's from Puck Pups. It says, "Do I have to buy Boeing shares on Monday, 11th, January 2021?" That's today, the guys that you're watching this, the day that I posted this. "After the expected crash," he says, "what if I wait until the price goes under 150 per share? I like buying cheap and selling when the price doubles." So we'll be going over that in this video, going over some of the news with Boeing, but more importantly, focusing on what these traders believe in buying and then selling once it doubles. Because I think a lot of these people are not focusing on the fundamentals of the business. They're just focusing on trying to get in and get out for a quick profit. And why I think that this will end poorly for people like this man right here who just commented this comment. But it's going to be a fun one, guys. If you're not familiar with me, if you're new to my channel, I track my annual and monthly dividend income through the 24 companies that I own listed here on the left. This is what they pay me on an annual basis. And then together, this is what they pay me annually. And this is my real monthly dividend income. And then on the bottom two right here, I also track my monthly portfolio value and my monthly YouTube income. And as you can see now, after we factor in the cash that is in my portfolio, I now have over a $9,000 portfolio. And a big thanks to you guys because I just received a $30 referral 5 times today. I woke up to my portfolio and I had $156 cash. And $6 of that was through dividends that I received from Pepsi and Kimberly-Clark over the last couple of days, but $150 of that was from referrals. And right now, as you can see from these $30 values right here, on my Refer and Earn tab, right now, if you're wanting to get signed up with M1 Finance, this is the brokerage that I use, this is the one that you're seeing in the video right now. If you're wanting to get signed up, you can use this link down below in the description. And if you download it and you sign up and deposit $100 to the platform, you can get $30. $30, guys. It's normally 10. Sometimes they boost it up to 20 for a promotion, but right now they have it at the highest dollar amount I have ever seen it, and I think this is the highest that they've ever done it since being a company. So $30 is a lot of money to get started. So if you want to download this link, and you can get me past that great number of 69. So thank you guys so much for the support, and if you want to invest in the portfolio that I invest in myself, which are these 24 companies right here as I'm scrolling through them, if you want to invest in them yourself, this is also down below in the description with the Share My Pie feature, and then there's also other things as well like auto savings accounts, credit card referrals, and lots of other things as well. But let's go ahead and get started, and let's look at stock closing at record levels as Wall Street assesses stimulus prospects. Now let's go back here to M1 Finance and let's go ahead and take a look at SPY. This is the S&P 500 ETF. This is the Spider ETF representing the S&P 500. And once again, on Friday we did end with another green day going up about 0.57%. And this is closing at pretty much all-time highs here. And the dividend yield for the S&P 500 is now under 1.5%. I can't remember the last time I saw it that low. That is crazy low. And if you look at the 1-year chart, this is going back almost exactly a year ago at the beginning of 2020. You can see that this was $320, and now today it's at $380. And this is well past the highs before the 2020 pandemic. And if you look at the 5-year chart, that's pretty incredible. On a money-weighted return with M1 Finance, you see a 118% upside. So a massive upside there. And this past month or two, the reason why this is going up so much is mostly because of the potential for more stimulus. Now, I know on this channel I'm not here to talk about politics. I'm not going to go over that at all, so don't worry. But I know one of the big main bullet points for the Democrats is that they really are in favor of stimulus. And with the new blue wave taking place, I know that Wall Street is pricing in even additional stimulus. We already received the first stimulus check of $1,200 to every single adult, independent American. And now we just received the second stimulus check of $600 that people are getting every day right now. So that is going to start taking its effect into the economy over the coming months as people start to spend that on groceries, spend that on rent, spend that on discretionary income if they still have their jobs, or just flat out save it and invest it, which pretty much all those things can benefit the economy. So when we look at this and we see that there could potentially be more stimulus, even a third stimulus package, this is making Wall Street very excited because who knows what will happen with the national debt and all that type of stuff. But when we look at things as far as profitability for businesses, opportunities for revenue growth for these companies, this is just better and better news as another stimulus package could potentially be passed over the coming weeks, over the coming months. And as we scroll down here, I'll read this article. I'll read the first couple of paragraphs. It says stocks finished at records for a second day Friday as investors assess expectations for more economic stimulus following a weaker than expected U.S. jobs report. A report in the Washington Post said West Virginia Senator Joe Manchin opposed providing Americans with $2,000 stimulus checks, creating an obstacle for President-elect Joe Biden's push to boost stimulus measures. Biden has vowed that larger relief checks would be delivered to Americans if the Democrats won the Senate runoff elections in Georgia, which they did earlier this week. Biden, in a televised address Friday, said a weaker than expected U.S. jobs report showed the need for more economic stimulus now. So regardless of whether or not stimulus is a good or a bad thing, obviously it is going to go back to benefiting these huge top Fortune 500 companies as they spend money. Because let's think about the top things that people get their stimulus checks with. Let's say if they lost their jobs. What's the things that they're going to spend money on? Let's say they spend it on groceries. Everybody's got to eat, right? Well, where do they buy those groceries? They probably go to places like Walmart, Target, Kroger, those type of places. So if that's the case, these companies are in their S&P 500. That benefits those companies, gets them more revenue, more profit. Let's say they spend it on rent. Okay, well, lots of these real estate investment trusts are also in the S&P 500, right? So that means that these S&P 500 REITs go up in value. Let's say that these people do indeed have their jobs and this is just discretionary spending. Okay, so let's say they get a free $600. One of the main things that they're going to do is they're going to spend it on items that are unnecessary, things they don't need. Maybe they go out and buy the new iPhone. That'll benefit places like Apple. Maybe they go out and buy other types of products. Like maybe they go out and they shop online. Maybe they buy things through Amazon, just other random items that they don't necessarily need. That benefits Amazon, another Fortune 500 company. Or maybe they go back and invest it. Maybe they invest into their 401k or their IRA or whatever the case may be. That once again just makes these companies more profitable as they have more money to spend. At the end of the day, there's not many ways that this doesn't affect these businesses in a positive way. And if you're someone like me who has money invested into the stock market, your value of your portfolio is going to dramatically increase. Now, I'll go ahead and tell you that I have not gotten my $600 stimulus check. But regardless, even if I get it or not, I think that since it got passed, that it will probably take this portfolio up by at least $600. That's my form of a stimulus check right there. And when we look at data like this and we see that there's possibly a third stimulus check even after record numbers have already been passed for supporting the economy, I think that we will see a dramatic bounce back, especially since the coronavirus was a very short-lived thing. It's starting to come to an end with the vaccines being rolled out. I think that the jobs report is going to start looking much better from here on out, with or without stimulus. And if stimulus gets passed, it will just put the throttle on that, and I think we'll get right back to record unemployment levels if more stimulus gets passed. Like I said, don't know if it's a good thing or bad thing. We could debate that all day, but at the end of the day, it will benefit these big businesses. It will benefit the stock market investors like myself. Now, I did receive this comment, and I want to go ahead and move on to this. This was written by Puck Pups. It says, do I have to buy Boeing shares on Monday, 11th, January 2021, after the, quote, expected crash, he says. What if I wait until the price goes to $150 per share? I like buying cheap and selling when the price doubles. Now I'll go ahead and pull up Boeing stock real quick here, and right now it's trading at $210. Now what I like to look at this is, it doesn't matter whether or not Boeing's going to go under $150, because I get comments like these all the time from random YouTube comments out there asking, should I buy blank stock when it gets to blank price? Should I buy this stock when it gets to this price? Should I sell this stock when it gets to this price? And in the same way, in waiting for a stock to hit a bottom to buy it, is the same thing for waiting on other stocks like Tesla to hit a top to sell it. You cannot predict these prices. Imagine how many people were predicting that the stock would top out at $300 a share, $4, $5, $6, $7, even $800 a share. This stock is on track to becoming one of the most valuable companies on earth and is just short of now $1 trillion, as crazy as that is to say. And the same thing with Boeing. I never thought that Boeing would ever get to as cheap as it did back earlier in 2020. At the beginning of 2020, this stock was actually trading under $100 when previously in 2018 and 2019 it was over $400. So massive downturn there of 70, 80, 90% downturn. So when you look at numbers like this, trying to guess a bottom, so for example, if this is trading at $300 a share and you say, okay, I'm going to wait until it hits, say, 200. If you're going to buy it at 200, well then you would have been down 50% on your money at one point, and who knows if you would have been able to hold through that. Now the same thing on the upside. If you're buying at 100 and then it gets to 150 and you're saying, okay, this is the top, I'm selling out. Then it goes to the mid 200s and then you miss out on that opportunity. The point is you should not be focusing on price. And what this is, when I get comments like these, it says that people are trying to trade and they're not trying to invest. And this chart, I think, breaks it down perfectly. So if we look at the trading versus investing picture here, it talks about the differences between these two. Trading is focused on the short term. Investing is focused on the long term. Trading is focused on a profit mindset. Investing is focused on the growth mindset. Trading on the third option is more risk involved. Investing is less risk involved. Trading has benefits from volatility. Investing has benefits from stability. Trading has more technical analysis. Investing has more fundamental analysis. Trading has more buying and selling with market waves, and investing has more buying and holding strategy. And last but not least, trading has best for building capital, and investing is best for growing capital. Now, when we look at these, I want you to just really focus on the psychological things of this side and this side. And I want you to think of the psychological attitudes towards both of these approaches. And when you see the left side, it is much more volatile, much more of a gambler's mindset. We see things like short term, profit, higher risk, volatility, technical analysis, a lot of key buzzwords that are really more of a hype growth opportunity there, right? When we look at investing, it is more of a long-term growth mindset. It is a smarter and more profitable way to inherently manage your money. So investing is the way to go, in my opinion. And I think that the 95% of people that lose money in trading wouldn't be able to show you their trading accounts like I do, because I show my portfolio day by day, week by week. You see every single move that I make, and this shows you how I'm successful for the long term, and I still get great returns, as you can see from this little part of my little portfolio right here. But when we look at these two, I think people typically automatically lean towards the trading left side because they want a short-term profit. Everybody wants to get rich quick. Now, if I look at this, I went ahead and pulled up this article. I believe when he says the quote, expected crash, I believe it's because of this article that was posted just a couple days ago, and this was posted in between the weekend, so this hasn't been priced in yet. It says Boeing to pay more than $2.5 billion to settle criminal conspiracy charge over the 737 MAX. Now, it doesn't really matter whether or not Boeing goes down or not. It could go to 150, it could go much lower, it could not even budge by this price, and trying to predict what's going to happen off of this article it's pretty much worthless. So when you look at these news, it's important to know if you're an investor on a long-term basis, will this affect Boeing? I don't really think so. This is a short-term pain for a long-term gain. I think in the long run, Boeing will get back to manufacturing and selling at 737 MAX. They'll continue to have more opportunities with growth opportunities as the commercial airline sector comes back and these companies continue to buy planes from them, because they really have an oligopoly between them and Airbus being the only two that can really produce commercial airplanes pretty much. And then when we look at this, we see that these type of things with trading, it doesn't look good. I want to go ahead and show you one more picture. It says 100% or all traders start with a dream to get rich quick, just like we spoke about. 40% trade for only 1 month. 80% quit within the first 2 years. Only 7% remain after 5 years. And then 1% of all traders can profit net after fees and commissions. That is pretty crazy. So trying to guess these prices and trying to trade these companies are not efficient. And I want to show you one last piece of article here before we move on, before we end this video. The majority of investors and traders will not be able to beat the benchmark because they themselves create and are a part of that benchmark. What is really interesting is that while a great hedge fund may make an average of 20% a year over the last 20 years, the average investor in that fund has a high probability of making far less than that. Why? Because they invest and pull out their funds at the wrong points, just like they do in the market. The hedge fund or mutual fund in this micro market, where investors slash traders can deposit and withdraw based on how they think the fund will do. So basically, if the fund goes up in value by a lot of investors start buying high, and then they end up selling low once the fund underperforms. So even if a hedge fund or a mutual fund or whatever stock goes up 20%, the average trader likely did not get 20% or more off that. They likely got less than 20%, if not usually even a negative return. Because as it's going up, they buy, and then the moment it dips, they sell. And the same thing goes for these hedge funds and mutual funds and really anything in between, and that's what creates market waves. That's why you see the market generally trending in one direction. It either goes straight up or it goes straight down. You see little hiccups here and there, but generally the market is moving in one direction for the most part. And even if the stock market goes up 10% a year, that's why the average investor only makes returns of about 2%, only matching that of inflation. So trying to guess, pucks, if that's your name, pups, whatever. If you're buying Boeing based off of a price point of 150 and then trying to sell it the moment it gets to 300, this is not something I would recommend. This is not the strategy that I use. This is not what I've been successful with. Focus on long-term companies that you know will be successful over the next 10 years and just buy them and hold them and don't sell them no matter what. As long as the fundamentals, the company, the management, the business model all continues to stay the same, continue to own these companies no matter what. And likely your portfolio will start to get in the green like mine. And like I always say, guys, if my portfolio is in the green, if my portfolio is in the red, I show everything. I show the green days, I show the red days. So if this changes, please, I will be the first one to correct myself. But it has been the proven way of making money in the stock market over the long run, and that's how people become millionaire in their 401ks by just investing, buying, and holding. But thank you guys so much for watching. I really appreciate it. Like I said, $30. If you want to make a free $30, download M1 Finance, deposit $100 to the platform. This is the highest it's ever been. This ends very soon at the end of January. So if you want to do that, you can have 69. Referrals get up to 70. And go ahead and check out all this stuff in the description like I mentioned. But thank you guys so much, and I'll catch you guys next time.